What is going on, everybody, and welcome to a trade recap. Today we're going to be focusing on Euro US dollar and specifically on two buy positions that were taken, one for 20R and another for just shy of 30R. And I will also highlight a missed trade that would have netted close to 60R. So let's get started looking at the higher time frame, the 4-hour chart. So what we can see if we just kind of scrunch our chart a little bit, Euro US dollar has been on a pretty strong uptrend. We've been putting in higher highs and higher lows, and it basically seems like this thing is shooting to the moon. And so if we look at the 4-hour, what I was looking at here was essentially a distribution schematic playing out, basically getting a preliminary supply and looking at a buying climax, an automatic reaction, and then an upthrust is what initially I was viewing this as. So if I look at a distribution schematic, this was kind of what I was following, that we, again, preliminary supply, and then we had the buying climax here, automatic reaction, and then the upthrust, and then looking for basically the continuation, which would fall after breaking the lows of the automatic reaction and preliminary supply. But with that being said, what began to notice is as price began falling to the downside, there was these lows here at the basically the automatic reaction area, and we had a higher low here. When we broke that, we kind of swept the liquidity and continued to push back up. We can see that on the hourly chart more clearly. And noticing this behavior, basically that shifted gears a little bit, thinking, okay, maybe we had the schematic a little bit too far ahead of ourselves in that this was actually the buying climax, and this is kind of the automatic reaction that we would be seeing, and then we would be looking for an upthrust basically to break these highs. So when we tested back into these lows and began kind of pushing to the upside here on the hourly chart, this is when we tested that theory. So what we can see is once we've basically hit these lows here, we've tapped into the liquidity that's sitting here. So we have a lot of people that would, buy support, for instance, with their stop loss just below the lows here. And what we can see is this wick basically would have tapped them in and basically shot them out. We would have break and retest traders who would have basically tried to sell the break and the retest. So basically what I'm trying to get at here is there's a fair amount of liquidity sitting in this area, especially since we've broken market structure. It's a 4-hour higher low, a 1-hour higher low, yada yada. And we had, this overall strong push to the downside. Now, if we're looking at it from a market structure perspective, we can see on the 4-hour we just have a push to the downside, a little bit of a retracement, and then it broke the higher low here, so which is changed to a bearish market structure. If we look at that on the 1-hour, we can see things slightly differently, and this was kind of a first sign for us to kind of maybe consider shifting gears slightly. So what we can see is we've basically pushed down, we've created a low, created a higher low, or a higher high, we've created a lower low, a lower high, and then we've broken that low, creating a lower low, and then created another lower high. Then we've just barely broken this low, creating a lower low, but then what we can see is we've actually then broken the high and created a higher high. So it's kind of an early stage shift in market structure, but then we again broke the low, created a lower low, and then we see this hourly candle, and this is what struck the attention here. We can see that we've retraced and almost engulfed this entire candle and created a large wick that again tapped into the liquidity on these lows here. So if I look into the 15-minute chart, what I've mapped out here is the market structure that I was looking at. So we can see again the lower low, the lower high, the lower low. Then what we can see is price then impulse to the upside. It broke market structure, creating a higher high. And this impulse up here is this 1-hour candle. And then the continuation was basically the break of that market structure. So when we see that, that starts to put a light in our head that, hey, something's changing. Maybe we had our schematic slightly incorrectly, and that, our upthrust that we were looking at right here is maybe actually the buying climax, or something has changed and the market is likely shifting, so maybe we can get a buy situation. So if I drop down into the 5-minute time frame now, what we can see is the same thing I showed on the 15-minute, just it's a little bit clearer. we can see, you know, the lower low, the lower high, the lower low, and again, we break to the upside, breaking market structure, putting in a higher high, which then based on that, we would be expecting, if a bullish trend were to occur, that we would be looking for some kind of higher low and then a continuation of that trend. Now, if we're looking down here, we can see we've spiked this. This was the liquidity grab in that 1 hour wick there. And then we basically see a move to the upside that's quite strong, and then a strong move back down into basically the lows of all of those candles. Kind of holds back in there, and then that's what creates the large move to the upside. So now, where we took the trade on the 1 minute time frame, and I'll just make this bigger since we can just focus on this now. What we can see is, even knowing that those lows were a point of interest, kind of a value area, what we can see is we have a schematic for an accumulation. Now this accumulation is a little bit different than basically the accumulation that would have a spring within it. What we have is a large violent move to the downside, which is the selling climax. We get the automatic rally, and within that we do get some secondary tests, and it basically tests the lows within the trading range, and then it continues to the upside. Now we wouldn't be looking for a buy down here because nothing's confirmed, but what we can kind of gauge from this is we do have an accumulation schematic that then was the origin of a larger impulsive move to the upside. Now, if we kind of break that down to how did we actually enter this trade, once we've broken market structure here, this was the prior lower high in the market move. So once we've broken that, what we can see is it came from an impulsive move to the upside. We had this pause in the market, and we had this candle, basically this full body, very minimal wick bearish candle. Then we had this large run up in price that then broke the market structure. And that's the important factor here. So this is our order block, our bullish order block. And the reason that it's an order block is because it's the down move before a large impulse that breaks structure. It needs to break structure for it to actually be fully valid. And of course, it came from an impulsive move. And what we can also see is we do have a small element of pricing inefficiency as well within this kind of area. So this makes it a key area of interest for us. Again, we're trying to find a higher low in this case because we've broken market structure, creating a higher high. So what we did here for an entry is we put a buy limit order, basically 50% of the zone. There's two different ways that we can take it: 50% of the zone, or you can buy at the top with a stop just below the low of the order block. Totally up to you. You kind of run into two different instances. If you do 50%, there's a chance you might not get tagged in because price just barely taps and goes. And then there's other situations where it can go much deeper into the zone, where 50% will give you a little bit less drawdown. But at the end of the day, it's more important to get into the trades than to have no drawdown, because you could have a trade that goes just because you're waiting for the 50% and you don't get it. But that's how we chose to get into this trade, just because it is a pretty shallow higher low that we would have been trying to trade. And again, one thing that we want to really stress is we don't like to trade setups with anything less than 3 pips in stop. We find that you can get into a lot of trouble, especially if you're trading pairs that have spreads 1-2 pips in spread. In this case with EURUSD, our spread is about 0 pips during key market times, so not too much of a worry there, but it's definitely something to consider. And what we can see is once price tapped into this order block, it then just began to create higher highs and higher lows, and broke the market structure here, creating a higher high. Basically in this candle here, we got a higher low, a higher high, and pretty much just continued trending to the upside. And what we can see in a couple instances, and I'll call your attention to this area right here, we can see that we made a higher high, and we kind of just created a little bit of a resistance, almost what looks to be a 1 minute distribution schematic. And we started creating a bunch of lower lows and lower highs. And this could be a sign that the trade is starting to reverse, or that, buying momentum has started to decrease. But if I switch to the 5-minute chart, what we can see is that same area is just a pullback on the 5-minute chart. If I bring the two charts, we can see that probably a little bit more clearly instead of looking at one and the other. But that's basically how we're looking at setups as we're managing them, as we're in trades, and ultimately as we're looking in setups. Market structure becomes very important, looking at higher highs, higher lows, how they start on small time frames and eventually increase into the higher time frames, and just looking at the relationships in between them. Because in many cases, if you're going to see higher highs and higher lows on a 1 minute time frame, and that begins to happen on the 5 minute time frame, in order for the 5 minute time frame to create a higher low, more often than not, the 1 minute is actually going to make a series of lower lows and lower highs before that's formed. And again, we can see that here where we were making lower lows and lower highs on the 1 minute, but we actually then created a pullback on the 5 minute. It is a very deep one that basically is an equal low on the 5 minute, but it's a pullback nonetheless. We can even see it right here where we, on the 1 minute charts, we created a higher high and then basically created a low and then made a lower low here, but this was actually just the 5 minute pullback. So just kind of looking at the relationship there. But as we can see, we were targeting the prior 1 hour high as kind of an inflection point. A couple of reasons why. Ultimately, what we'd be wanting to target is this key high here, because we would be expecting an up thrust if this is truly a distribution schematic at play. But the reason why the 1 hour area was looking important for us is, in order to confirm that this was in fact a bullish trend, we would need to break this high. But what we can see is we have this order block here on the hourly time frame where we have this large up move candle before a down move candle that broke structure. So we know that there is a high chance that we could get reaction here, and we can refine this down on the 1 minute charts just to get to different values. We're not going to do that now, but that was essentially the rationale for targeting this. And to be honest, a 20-hour trade is pretty incredible. So we weren't really looking to push it too far. We did on the second trade, but I'll explain to you why. But as we can see, his price just continued to make a series of higher highs and higher lows and pretty much smashed the target. We took off the majority of our position in and around this level, and price then came down and took us out to complete the position. So now if I go on to position number 2, what we can see if we go back to the 4-hour charts, we can see that now we've created a move to the downside, a lower low, a lower high, a lower low, and then we've now pushed up, creating a higher high. So we were expecting that if this bullish trend were to continue, that we would be looking for a higher low to form somewhere in kind of this area, of course. So if we look on the 1 hour chart, this is where things started to kind of fall into place for why we were looking at this trade. There's basically two major things on the 1 hour chart, using this 4 hour higher low as our essentially reason for entry. So if I look on the 1 hour chart, and let me just grab a box tool, what we can see is we have this down move candle that then pushed up and broke structure. It's not as clean as other examples that I've just shown, but it also was a point of interest that took out liquidity here, so it does have some merit there. So what we can say is this is our bullish order block that we would be looking at as a point of interest. We're not going to just take an entry solely based on that, one, because it's a higher time frame, and two, because we do have kind of less of a convincing break of structure on the hourly chart. But another thing that we can take a look at as well is we do have an area of pricing inefficiency as well. So we basically have a large area of interest at this particular low, which kind of gives us an idea that price is probably going to be gravitating and almost needing to come back to somewhere around this area to get liquidity before pushing to the upside. So we're using those factors, the higher low in the 4 hour, pricing inefficiency, and an order block, as our points of interest. So what we then did was we looked at the 1 minute chart once we started approaching that area, and what we can see here is we can see a different schematic of accumulation forming. And the reason I say it's different is because typically we look for a schematic with a spring, and like I had mentioned on the prior trade, when we were looking at the base of this, we had this selling climax that then created the automatic rally and basically stuck around the low of that selling climax. It didn't break below, and it was holding support pretty strongly. Because we knew that this was a point of interest and we were getting this type of accumulation at that area, we decided to put a limit order just in and around the lows of this to get tagged in, which is a little bit of a riskier play because we could have very easily created that spring and then gone, but we would have looked to re-enter essentially on the retest of the spring anyway, so it would have been a loss that we would have taken, and then we would have just kind of pivoted our overall approach. But what we can see is in its own right, we've created this support zone. We've broken just below that support zone. So this is, in essence, a mini spring. It's basically shaking out any last little bit of supply that was in here. But what we can see is we are making a series of higher highs, and we are purging the lows, going back, creating a higher high, a higher low here. Then we're creating a lower high. We go back down in, we sweep this main low here, and then that's where we get the runoff in price. So it was a pretty perfectly executed position. But let's say you didn't want to enter there, you're waiting for a spring, you didn't get tagged in, you took a loss, whatever the case may be. What we can do is I will hide this, and what we can see here is if we're looking at that same schematic, we have this support area. It has basically just broken the low, it's taken the liquidity, and it's run up in price. And what we can see is we have a high here and a high here. This high would be more specific because we've created a lower low here, lower high, lower low here. There's a high here and a high here. So what we can see is when price impulses up, we break this high and we break this high. So we've broken 2 bits of market structure. We have this down move candle here, and then it continues, which then clears out all of the market structure over all of these highs. So we can use this as a basis of an order block, bullish order block again, and similar to the prior trade, you can either enter on the 50% with a stop loss just below, and again, we don't recommend anything less than 3 pips. It's likely going to be bad for your health. Or you can enter at the top of the order block and then have a little bit of a buffer, whether that be 3.5 pips, 4 pips, just to give the trade room to breathe more or less, just because of entering at the top portion here. But again, just for simplicity, I will use the 50% with a 3 pip stop loss as an example for this trade, just to showcase that even if you miss the entry down here because maybe you look for the spring, and once you've seen this, you went, okay, that is a spring, albeit small, and then look for that 1 minute order block that broke structure. Again, very important that it breaks structure first. It then taps in and continues on breaking structure, higher high, higher low, higher high, higher low, higher high. Then we get a lower low, lower high, lower low. But again, like the prior example as well, if I go to a 5-minute chart and just navigate to that area once more, we'll be able to see that the lower low on the 1-minute chart is just a pullback on the 5-minute, because what we can see is we just have this large impulsive move to the upside. We know that we are bound to make a higher low if we're putting in higher highs, and we get that. And again, we were targeting to the upsides the highest high. So what I'll do is I'm just going to remove this, put on our original position, just so we can show the trade that we actually took, not the second entry, but it would have actually yielded a slightly bit more percentage because you would have been able to have a slightly tighter stop. We used 6 pips just to kind of adjust for the potential of a spring. But the idea of this trade was targeting the highs, which would be about around 30R. We took about 90% of our position off in and around here and let the last 10% run in the hopes that it would create an actual upthrust, but it looks like it's creating more or less equal highs before putting in what looks to be another higher low, which is totally fine. Again, we were happy with 30R, 20R here, 30R here, just really playing with the possibilities of understanding these schematics and looking at overall market structure and how would be looking at the charts in that regard. So those are the 2 buys. Again, similar entries, similar concepts, just putting as many confluence factors as we possibly can to frame up a trade from the higher time frame down to a 1-minute execution. And then the final trade that I'm gonna quickly just run over is this 60R miss trade. It happened at about 3 in the morning Eastern time, so I was fast asleep, so I would not have caught this trade, which is totally fine. And again, like I had mentioned, we were looking at this as a potential up thrust and then looking for the sell-off. So if I just look at, move this on the 1 hour charts. Actually, we'll go to 15 minutes, a little bit clearer on the 15 minute than it is the 1 hour. But what we can start to see when we look at lower time frames, we can see this slowdown and basically this resistance level that's being more or less held as secondary test. We get what looks to be an up thrust, and then we start to see a breakdown. And that was essentially the overall and the overarching reason for this particular setup, because it kind of hits the textbook quite nicely. But if we're looking at this setup, we can then see, we get this overall preliminary supply here. We get a buying climax, an automatic reaction, some secondary tests here and up here. And then we get a little bit of a sell-off that shakes out the lows here, which then we get the up thrust. This breakdown of this area of supports essentially is what funded this move to the upside. It took out a lot of liquidity here, coming from an obvious bull trend overall. A lot of people would be stacking in buys, seeing this type of market structure, so it's only natural that we're going to break down those lows, grab the orders, and then continue to the upside, which then completes the overall upthrust that we would be looking for. And once we see that raise in price, we can start to look for an entry opportunity. And what we can see here is we've broken structure here because we have a higher high here, broken structure, higher high, higher low, higher high. And then what we can see is we've broken this structure. We've broken this low here, right there. And with this overall impulsive move, it looks a little messy. It just shows the efficiency of price and how this move carried on to the downside. But there's two areas of interest that we can take note of. The first one is where I have my rectangle drawn. We have this up move candle followed by a large move in price, and this is ultimately what started the break of structure. So we can look at this as a bearish order block. But there's also another area that we can also look at, and that's this up move candle before we get this large increase in price here. So two different options to look at. Ultimately similar result in this particular setup. This is the more recent one, so that was the one that I would have chose to look at personally. But what we can see again, like I had mentioned, entering at the 50% from a consistency standpoint, but also could have entered at the base. And again, kind of running your order a bit. When you see two, sometimes it can be good to increase your stop to accommodate that prior zone as well, because if this broke this zone, tapped in 50%, and continue pushing on, that's also another option. But we'll kind of just go with the main thought of using just the most recent one, not factoring in anything else. And we'll put it at the 50% mark again, just to maintain consistency in the teachings. And what we can see here as well, if I can scrunch my chart up a little bit and bring it back, this is about a 3 pip stop loss. Wouldn't recommend going any lower than a 3 pip stop loss. Again, you're just going to run into trouble, and if you use just the basis of this, you would have very easily been stopped out, which is also why we say if you're selling at the base of the order block, it's better to give a little bit of a pip buffer, or a little bit of a buffer in terms of pips, just because if you're selling at the 50%, you can get away with a smaller stop loss, which you can kind of see that gap. So anyway, what we can see is price then taps into that area, a little bit more drawdown than the other positions, and then continues to push down, creating lower lows, lower highs, lower lows, lower highs, and altogether just ends up making for an incredible trade that just shows the overall power of the strategy. And what we can kind of just gauge from these three trades is, one, you can take buys in a distribution schematic as well as sells, even though a distribution is a larger sell schematic. But then we can trade a distribution within a distribution. We can look for accumulations to ride more counter trend moves, and just really really shows the power of this overall approach and the fact that each one of these trades is taken based on the exact same rationale. We're waiting for a break of structure, looking for an order block for entry. We're using that entry to then take us long or short. We looked for, in this case, of course, we entered slightly differently, but we did have the order block entry here. And then same thing with here, we had the order block entry to take us short. It just shows the power. And I hope that these trades were explained properly, a little bit of understanding. They're a little bit perfect in a lot of cases. There's a ton of confluences, and it just shows, you got to be a little bit more flexible when looking at the schematics. It's so easy to be so caught up on the distribution side of things, but then when you see things are changing, start looking for different things, such as accumulation at a point of interest. If you start to see that, maybe that's an indication that something's changing and that you can take advantage of that. And it just shows the power of understanding market structure, understanding order blocks, understanding how all these pieces fit together and make for some really, really great trades.